Thursday, January 23rd, quick one-up video for you wonderful ladies and gentlemen. Markets have been trading paint between tech stocks and then the rest of them, usually the Dow. The Dow has been playing pretty nice catch-up. Remember, the decline started in the Dow and actually in Apple. The market has been making some new highs in SPY, so it's pretty good. I would say things are going well for the market, at least early on in the year. January tends to be bullish. You have what's known as the January effect. And often the first quarter of the year is where portfolio managers try to chase performance so that they can lock in those gains early. Sometimes Februaries are weak, but often we have January, February, March actually pretty strong. And then things kind of taper off a little bit toward tax time in April, and then there's always the sell in May and go away fear. VIX is hanging out in the 14s here. I think volatility is too cheap to sell here. I like buying puts or put spreads as protection. If you're going to sell premium, I would only do covered calls here. I don't like selling puts. I think the risk reward here is asymmetric because if price starts dumping pretty hard here, like let's say we have a look above and fail scenario, which we're going to talk about in SPY in a minute, I think that we could see a much larger liquidation break and you'd have price and volatility going against you basically off the all-time highs. As far as the ES goes, as long as we stay above 6,100, I think it's okay. The next big upside target is the 100% retracement at 61.7875. Qs are similar, but they are just below the 78.6. Bulls there need to clear 22,074 quarter to get up to 22,450. On the downside, they need to hold the 61.8. If they can't do that, it's problematic. That would, of course, be 21,779 quarter. I think if that were to fail, we'd repair the rich close from 2 sessions ago at 21,668 quarter. The apples to apples in the ES, by the way, it would be 6,065.75. As far as SPY goes, we do have a new all-time high. We closed above the 12.6 reference highs at 609.07. We are above there now. If it gets back below, there is the look above and fail scenario. I'd start getting increasingly more bearish if we lost the 12.18 Fed day high at 606.41. And then, of course, if we took back the entire move from today below 605.52, I think we would probably come back to the not only the 600, but likely the 596.19. And then we'd see the 601.85 is the 78.6. Generally, if you can't hold the 100, you come down to the 78.6. And if you can't hold the 78.6, you come down to the 61.8. That whole MA to MA, and in this instance, fib to fib thing. As long as we stay over the 609.07, there is the chance for a blow-off move to 634.11, which would be the 2 times range from the opposite of the head and shoulders that we saw. This would be failure of the head and shoulders to the upside, which is currently happening. And don't underestimate when those things happen, because when head and shoulders patterns trigger and they follow on, there's usually a big move to the downside. Also, when they fail on the upside, it negates the bearish pattern and it tends to rally. As far as the Qs go, we're hovering around the 78.6 at 530.71, so the bulls will need to hold on to that to see the 539.15. We have been in a responsive market, so I'll be very curious to see if the SPY move holds and or if the Qs do get up there, if it can be up and out, or if it just chops down and we see either sideways to lower. On pullbacks, they'll need to hold 524.08, which is, of course, the 61.8. Apple has not been helping the situation here. It's been weak. It seems to get downgraded every day. We did hold our reference 219s and did get a bounce. It stalled at the 227.04 level today. I thought we could have the opportunity to fill the 229.98 gap fill that we saw from 117. It wouldn't surprise me to see that because that would be a check back to the underside of the old uptrend. I do like that the money flow is starting to bend back up. It's actually right at the downtrend from the money flow, so it's sort of do or die here with regard to Apple. If there is a liquidation break, I don't think the 200 MA is going to hold. I think we would probably come down to the 213.92 and maybe into the 209s to 200 area, where there had been prior resistance and likely would be support. That would be a pretty hefty pullback for Apple. Generally, Apple tends to pull back into like a mid-teens pullback where we are now, or it's a 30% pullback, which would obviously mean more downside. I told you off the highs, that's about 182, if that were to take place. As far as NVIDIA goes, that obviously is a huge beneficiary from the AI infrastructure play that's happening, this Stargate. The bulls need to hold 144.11, which is the 61.8 retracement of the range. We haven't made new highs in NVIDIA here yet, but it is acting a little bit better, so just make sure it holds those 144s. Anything below 140 to me would start getting increasingly more bearish, though. Microsoft has been coming back to life here. We seem to be in a bit of a channel on the upside. If we were to keep going, we could see the 450.64, and if we were to hit the channel high, 453.93. Google has been acting well, but having resistance in the 200 zone. I think that will remain resistance until it doesn't, so I do like locking in some gains here in Google, and we are trading up near the channel high. Netflix, of course, was the belle of the ball yesterday, and basically closed on the lows. Today it closed on the highs. So I like that it is consolidating within the earnings day range. So I think it's really simple. If the bulls can get over the 999 level, basically 1,000, it should continue to keep going after that point, and it's in clear air. We'll have to do some more work on that in the weekend video to determine what the next upside price target would be. I'm thinking 1,000 though is going to keep attracting sellers for a little while though. If we were to break below today's low of day at 953.90, I think we're coming down to 941.75 to 926.90, and then we'd see. Bitcoin is, of course, our ultimate risk-on and risk-off arbiter, and it has been acting well with the Trump administration that seems very pro-cryptocurrency, and they want to do crypto reserves. We did have a look above and fail of the 1227 high at 108,960, so the bulls will need to clear that for still higher prices. We are still currently in the look above and fail scenario. If that were to be the case, by the way, we could, believe it or not, rotate all the way back down to the 89,525 level. I don't know that that's the base case. I actually think we may have had responsive selling and may clear it. And if that were to be the case, we probably would see 115,195, and depending on how long it took, we could even make a move up to the 120,110 level, which would be the extreme channel high. Bulls have been benefiting with a bit of a tailwind with the dollar breaking down here. Anything below 108.071 is more bearish. We stopped right around the 50 MA today with a little bit of a close below it. Anything back over 107.587 I'd be a little cautious with, because that could see some still higher prices. But we have seen the gap and go below from 4 sessions ago, below the channel and the 20 MA, and I had said I think the dollar is weak until it can reclaim the 20 MA. If it does keep pulling back, we could see the 106.517 down to 106.126 level. As long as the dollar's pulling back, that is a tailwind for the markets. TLT has been holding in. It hasn't really added to the rally. It actually pulled back today to the 10 MA, which is sort of our must-hold zone. It's got to hold 86.55 and then get back up over 86.83, which is the 20 MA. If they can do that, I think there is a check back to the 89.55 level. We did hold on the channel low. It just seems like there's some consolidation here. Bulls will need lower rates, lower oil, and lower dollar. Oil has been cooperating for the most part here. It did have that big pump up in the beginning of the year like we had expected, but anything back below the 200 MA I think remains bearish at 75.08. Anything back up above there gets a little bit more iffy, but there could be some support around 72.88 and then the 100 MA around 71. Generally speaking, we are now up to the all-time highs in SPY. Probably a good area to lock in some gains, because we have seen in recent weeks and months that we're in a responsive market and that we don't necessarily break out. We sometimes look like we're breaking out and then obviously pull back into range, and then we look like we're breaking down and then pull back into range, which was sort of my base case for this year. I'm not married to that thesis, but I think it could still be valid. Be careful if we can't hold the breakouts. Then I do think that the probability of a liquidation break with the VIX this low increases. Like and follow for more.